and what a great return on investment, moving $9 million out of their estate, saved them $4.5 million plus all the appreciation. But that teamwork is critical. I mean, having a good CPA, and look, there's a lot of great, and that's my background, right? I was an accounting major, worked at the IRS, worked at Arthur Andersen. I have a master's in tax as well that I went and got at night, after law school. And so I'm highly sensitive to good CPA advice, and it's not my job to try to displace people, but look, just like sometimes they have lawyers that, are great at what they do for what they need to be doing. That happens in the CPA world as well. Maybe that CPA is really perfectly fine for handling your tax return, but has never sold a company before and has never done a stock versus asset analysis, which is the ultimate thing that we really need the accountants from, because there's this tug of war happening between buyers and sellers, right? Sellers want to sell stock to get long-term capital gains treatment and minimize any taxes. Buyers want to buy assets, right? They want to limit liabilities and they want to get a step up in basis. It's very important to be able to re-depreciate and re-amortize all the things they're buying. If you buy stock, you can't amortize or depreciate, stock. You just have basis until you sell. And so there's that tug of war. And so what buyers do is they say, all right, look, I'm going to buy your stock, Sam, but we're going to make this election, this 338H10 election for S Corps, to treat that deal as an asset deal for tax purposes.